morning, guys. Thanks for the applause. Before I jump into the presentation, I just wanted to touch upon, obviously, recent events, the hash war, the split. For me, as an entrepreneur, and the position that we have as a team, I feel a great sense of relief. I think that this is probably the best thing that's happened in a while. I grew increasingly frustrated with the direction that the previous, or ABC side, was taking Bitcoin for a long time. And for me, this is a weight off my shoulders. I feel very confident in the vision that Jimmy, Craig, Calvin, the crew behind all these teams are painting and the way that they're going. So I have a lot of faith in that. And I feel, like I said, I'm sleeping a lot better. Let's put it that way. So yeah, today I'm talking about the future of commerce. So basically how I see commerce is going to look like in 5, 10, 20 years because of Bitcoin, because of where I think this is going to take us and some of the things that I think it can do for us. So first of all, introduction, James Belding. So I'm the architect of the Tokenized protocol and the team lead. I'm also the co-founder and CEO of Tokenized Limited, which is a company that we are building to basically bring a turnkey, easy-to-use solution, a commercial platform, if you will, for issuers and users. So that would be beyond just investors, also customers of businesses who want to use tickets, anything you can do with tokens. We want to make that really easy for them. I'm also a former electrical engineer in the oil and gas industry and a Bitcoin maximalist. So here's the wizards behind the scenes. So I thought I'd introduce them for the first time. So we've got Sam Georges is a full stack developer. He helped me out with the wallet for our proof of concept, and he's now doing everything we can behind the scenes on the platform, back end, front end, all that stuff. We got Scott. He's a full stack developer, and he's also a wizard on every single language you can imagine, and he's done the back end, the smart contract, and he continues to help out in both cases. And then we got Fareed, who's a finance specialist. I knew Fareed for a couple years in college, and he was someone that really impressed me, and I had in my head as a little reminder that if I ever worked on something finance related, grab this guy, he's someone special. And then Brendan Lee, he's a blockchain specialist, so there's a few people in the space that I think have an intuitive understanding like Brendan does, and he's also just a genuinely great person. So as a preface, obviously Bitcoin SV to me is the only Bitcoin. It's the real Bitcoin, the only one worth looking at and investing time in. I hope most people share that sentiment here. So commerce is about to be transformed. So I really, really believe this. And I stopped doing engineering in the oil and gas industry and all that and quit my job before to focus on this aspect of Bitcoin and try to make this thing great. I see a lot of potential in it. I think the core concept with commerce is just really that it's voluntary exchange. It's the exchange of goods and services. And I think that having an immutable ledger like Bitcoin can really enhance that in many ways, which I'll discuss soon. But the key part for what I've highlighted here is the legal and economic side of commerce. So Bitcoin's secret sauce. So what I see Bitcoin as, and the important thing, is the global, public, immutable, reliable, and uncensorable ledger. Those properties are what give it value and are what make this thing special, what make it revolutionary. So yeah, the thesis that I am putting forward, the thesis of this talk, is that Bitcoin will become the ledger on which most of the world's commercial interactions take place. And I picked the word interactions really particularly. I thought long and hard about this one. So I see interactions as more than just agreements, more than just contracts, more than just financial transactions. I see it more as offers, communication that has meaning in terms of a deal and negotiations, receipts, purchase orders, invoices, things like that. So I'll talk about that a little bit more. I also firmly believe that now, where we sit today, that this will be the first mainstream use case. Now, I would have had a different opinion maybe 5 years ago. If Bitcoin had scaled properly the way it always been tended to and it didn't get hampered, the payment use case I think would have been stronger and would have likely dominated a lot quicker. However, today I think we're at a stage where the rest of fintech is starting to catch up, and we've got serious competition from the likes of Monzo, Revolut, N26, and many other competitors on their heels. And they've gotten the experience for users down to such a point where transaction fees are no longer an issue for them. It's free. They've added a lot of extra services into it, and the actual platforms, the user products they have are phenomenal. So that's serious competition, and I think that the cash use case is fundamental and foundational for Bitcoin. The thesis there does not change for me. That's something that I hope will develop, but I believe that the way that we really drive businesses to use Bitcoin is using it as a ledger first and foremost, which will, I mean, to them, it doesn't matter what the volatility is if they use it as a ledger, which is a really key point. I think it's going to take a while before large businesses adopt Bitcoin as their main currency or their unit of account. So the economics of a Bitcoin-based commerce. Great quote. This is one that really stood out for me. The most marketable goods are what become the media of exchange. So I believe, based on what we just said there, that Bitcoin will become the most marketable good in the world and the most marketable good we've ever seen before. And so all the properties that we know that Bitcoin has in terms of a payment system, the ultra low exchange fees, the immutability, the fact that it's on a public ledger that anyone can see, the uncensorable nature of it, and the detachment from politics, the influence, makes it something that eventually everyone will come to realize that they'd rather take Bitcoin as a form of payment over everything else. Everything else will have more friction, more cost, more headaches, more risk, more political uncertainty behind it. So these properties will eventually allow it to outcompete everything else out there. So I believe this. I don't know the time frames. I've got some estimates and things like that, but I think this is something that is inevitable as long as we stick to Bitcoin's original plan and scale properly. So yeah, as I've mentioned there, Bitcoin will make conducting business across political boundaries much, much, much easier. And I'll talk a little bit more exactly why I think that and how much easier. A single global currency removes currency risk and exchange costs. Now this is really, really important. And I'll talk a little bit more about that in a second. But the first thing that makes it really great for businessmen, for entrepreneurs, for people engaging in commerce, is that we have finally a chance to have a great standard unit of measurement for market value. So this is something that isn't going to change on a day-to-day basis. It isn't affected. It's global. So if you go to France and you buy coffee in Bitcoin, in this future that I described, and then you go to Canada, it's going to be very, very similar in price, and you're going to be able to compare the cost of things very easily. And I think this is really, really important because entrepreneurs on a daily basis have to make judgments, determinations based on data. They need to figure out what the market wants. They need to figure out what resources are useful to satisfy those needs and how to organize themselves, especially over time. And to have a standard measure that they can get comfortable with and become intuitively understand on a very deep level is really, really important because it lifts complexity and extra work from them so they can focus on the things that really matter. So this is a really key point. So what does business look like without currency exchange, especially in a global sense? Well, just to get an idea of what's happening today, the way that global business works, when you're importing goods, buying goods, trading overseas, you need to change that money for something that's suitable to the place that you're buying or transacting in. This is a massive, massive industry, and this is indicative of how much trade is going on globally today. So as far as daily transactional volume, trade volume, it's the largest market in the world at about $5 trillion US, which is absolutely enormous. And I did some calculations, and I think this is a conservative estimate, but if we assume that 0.07% of that daily transactional volume is taken in fees, whether it's through spread or just an explicit fee, then we're looking at an entire industry revenue across the globe of $1.2 trillion US, which is just ginormous. So you can compare that to oil industry, which is, we all know how big that is, and that's about $5 trillion US a year. So imagine all of that complexity, all of that work, all of those really talented people that operate in the Forex markets, that work at banks, that make this happen. Imagine not having to do all that work, having them go focus on something more meaningful to the planet to help us build something more better. I think, again, just to reiterate, I think the most important thing, though, is what it means to business people, right? When they're trying to make these judgments about how to plan for the future and how their business should operate and where they should import goods from and how they should build their products, I've got a story that I thought was really meaningful here. I used to know a person that used to import all the goods. So they got the distribution rights for a company that was in the UK, and they got it for Australia. And at the time, the currency ratio was such between the Australian dollar and the UK pound that they could just import the entire product straight from Britain. They could deal with the lead times, they could deal with shipping costs and all that, and they made a fantastic profit. So this is a really successful business for about 2 years. And then the currencies just dived, and the entire business model became completely unviable. You couldn't make money on it. So what that business person did was they actually invested in manufacturing capacity. So they started, it was a huge investment. They put in, I think it was over $1 million, bought equipment, trained people up, and this all took time. The first few projects were a disaster, and I think it honestly took them about a year before they were making money again, and it was a successful business. But then the currency thing dived again, and it now became a silly decision. It would have actually been better, given to where the currency was later, to actually continue importing from the UK. And their competitor was importing from another country that didn't have that currency risk. So you can imagine the stress and the waste that this company had to go through. And ultimately, I think they failed in the end. So this is something that I think is a major, major plus for Bitcoin and something that will really help the whole world. So convenient sound money. So this is something that I think is really exciting for real people engaging in real trade, real commerce. So today, central banks and the way they treat the money supply, I think is more to do about power and more to do about keeping politicians elected than I think about real fundamental economic viewpoints or theory. So for me, shifting, like you've got money and you're shifting the board around. You're basically reallocating assets or money over here and you're taking it from someone else. So it's a zero-sum game. Anyone who benefits from the monetary policy has someone that proportionally loses to make that happen. In the long run, it's actually a net negative because you've got confusion, chaos, things that people have to adapt to. You have currency hedges. You've got all these other actors and complexity in the system that actually just costs everyone. So it's not a positive thing. Bitcoin obviously can fix this. And one thing I really want to highlight is that real growth cannot be sped up. And I think the key reason there is that it takes time to learn. So I think if you really look at what I think they were trying to do with Keynesianism and monetary policy was they tried to speed up growth. Could they do better than what the natural growth rate was? And I think that the last 100 years or 80 years or whatever has shown that you cannot do that. And I think from my understanding, and when I've examined it and thought carefully about the details, is that ultimately growth comes from real people engaging in commerce. And to do that, to be a professional, to be a tradesman, to be a businessman, you have to learn. You have to experience all the nuances of your particular industry, of your trade. You have to make mistakes, you have to experiment. You have to do all these things, and they just can't be sped up. And I think even Bitcoin itself is a perfect example of that. If you analyze the last 10 years and you think about it, a common theme is that people have made assumptions about how it works, about how they thought it should be, and they've made mistakes along the way, and they've learned, and other people have learned from their experiences and heard other people talk, but it's an organic process. I do not think throwing more money at it would have sped that up. So Bitcoin is immune to interference from politics. So kind of what I was saying before, this is really important. This is what makes it sound money. It extends beyond political boundaries, and it can't be manipulated. And I believe that the core economic model of Bitcoin incentivizes miners, the stewards of the system, to keep that fixed supply, to maintain the sound money aspect of it. And that's really important. So another thing that's positive about convenient sound money for the globe is that regular people can save, and they can save meaningfully. They can save for the long term. You don't need everyone in society to be experts at investing, at finance, at stocks. You don't need that. So it's almost better to have a doctor or surgeon or tradesman or something like that just focus purely on what they do. And if they don't want to get into investing and they just want to save their money so that when they get to 60, 70 and they want to retire, that they have the same purchasing power that they did back in the past. I think that's really important. It makes their life simpler, less stressful, and it doesn't create a whole industry around it that's almost predatory in the way that they deal with some of this stuff. I've seen a lot of people not do well being forced to go into stock markets and invest, and they just don't end up anywhere. So, also businesses, a lot of businesses have to manage their cash, and to offset inflation, they often just put it into bonds, short-term bonds, long-term bonds. It's another headache, another thing that they have to do, more complexity. This is something that perhaps is better for them as well. So the legal aspects of commerce in a Bitcoin future. So Bitcoin has the potential to create significant value to society by becoming the commercial ledger. So this is my thesis. This is that all commercial interactions are going to be recorded to the Bitcoin ledger. I think there's tremendous value behind that. So agreements, interactions, transactions, everything recorded. The potential of a standard global ledger. So Bitcoin can ease friction in all commercial dealings. Bitcoin's valuable properties can be leveraged to allow for radical improvements to commercial record keeping in two important ways. So I don't think these are the only important things, but I want to focus on these for the talk. So standardization and transparency. So a standard commercial protocol. This is actually some of what I'm trying to achieve with Tokenized, and we're not all the way there yet. We're still working on it, but this is kind of what I'm trying to get at here. But if you really start to analyze contracts, commercial agreements, service agreements, even like employment agreements and the things that you need to do business with your employees and all the people related to that, if you analyze them even statistically or just in a logical way, most contracting parties, when they enter into an agreement, have similar concerns, similar things they want protected in that contract, right? They want to get the same things out of it. A lot of times the language is slightly different in these clauses, but the spirit of what they're trying to achieve is the same. And I think that this is an opportunity where we can actually start to standardize the language and the clauses into a format that people no longer have to think about what contract do I use. You don't have to go to a lawyer and get them to custom write it up or have them just copy paste it from another one, which is just different to another person's, and it means that lawyers have to go through it again and again to just make sure that everything is exactly the way it is, and really all you're dealing with is unnecessary complexity. And this is something that I think is really interesting when you look at the more complex agreements, like mergers and like high-level business agreements with many, many parties involved. They actually tend to be more similar than the simpler agreements. They tend to converge on very core concepts that are traditionally done in these things, and everyone doesn't want to risk going outside of those bounds because it's a proven model. So that was very interesting. And I think it lends credence to the idea that we can start to standardize this a lot more. So the idea basically is if we can expand op return, we can start to put in, for a standard agreement, we can put in all the clauses and all the particulars that are sensitive, they're private, people want to keep, like the actual numbers, let's say, in an offer and consideration, the people, the contracting parties, keep that private, keep that encrypted, but the actual clauses, if you standardize them and you have them on the public blockchain, then you can have things where customers can start to review, based on their experiences, the strength of clauses, the strength of contracts, whether there's things missing from it that they think, having learned a lesson, that it should be improved upon. And you can get sort of the crowd-sourced improvements on contracts where people only engage in a contract that they know 50,000 of the people have reviewed and said this is a really positive thing, that we've always done business on this contract with these clauses, and it works really well. So I think there's a huge opportunity for that. I also think that for EDI, I'm not sure if people have heard of that before, but that's electronic data interchange. So this is basically paperless purchase orders, invoices, business documents that get transacted between companies. I think something like 25 to 34% of companies in America use some form of EDI with all their suppliers and the people that engage business with. Well, I think this is an opportunity, once again, to put all that into a standard format, an open source format on Bitcoin Cash, or sorry, Bitcoin SV. And I think there's huge value when you look at what these guys are paying in transaction fees. For a single purchase order can cost as much as $3 US just to send to one supplier. I think if we get a standard open source version of that, and we look at the transaction fees and a lot with Bitcoin, we can get that down much, much lower. And also develop a standard where the entire globe can actually interact with these paperless things without having to set it up, without to engage with them, have custom specifications. So radical transparency. This is something that is offensive to a lot of crypto anarchists, but I think this is a really important part of this becoming a global mainstream tool, something that we all use, is that you need to know who you're dealing with. You need KYC. It doesn't mean that everyone knows who's engaged in that deal. They still have pseudonymous protection, and also just the fact that a Bitcoin network at scale is going to be so massive, it's going to be very difficult to pull out who's who and trace everything. But you need to have confidence that when you're engaging in a contract, that the other party, who they are, is going to be liable to take it to court if something goes wrong, right? Like, a lot of businesses have trouble getting money from suppliers and people they engage in, and you have to have some recourse. You have to have some way of chasing them up and eventually being able to go to arbitration or pursue it legally if you need to. And I think that's really, really important. I think the transparency part of it also holds a lot of promise for making sure that responsible people in responsible positions that manage resources for others, like companies, like governments, can be held to account. So their entire transactional history can be shown, and they can justify their actions. You know, it doesn't necessarily mean that they're acting unlawfully, but if they did some decisions with money, they can prove why they did it and where it went. So what do these improvements all mean on aggregate? So I believe if this is done well and we can achieve some of the things that I hope to achieve, I believe that we can significantly lower legal costs. I think less legal uncertainty, especially on the standardized component of contracts, fewer protracted disputes, lower administrative costs, fewer administrative mistakes, and less corruption. So what is Tokenized? What's our organization, our team doing to make this a reality? So we've designed the open source token protocol that I think most of you are familiar with, which Jimmy was saying in the beginning. That's now open source, it's released, you can have a look at it. It's still the alpha version, we've got a few more improvements to release, but it's getting there. We've also developed an open source reference implementation for smart contracts, and I'll get into a little more about that in a second. We're also designing an open source commercial protocol. So this is kind of the EDI thing I was saying before, for static contracts, purchase orders, invoices, all that type of stuff. And that's what our commercial platform is going to do. We're going to bring all this functionality to people, make it really, really easy for them to use. So the tokenized protocol, tokens and smart contracts. So I want to first define a token, make sure we're all on the same page here. So to me, a token is a digital record of ownership. A token really, when you think about that, it simply means, like when you've got shares, for example, there's a shareholder agreement, and you have contracting parties, right? Those contracting parties are typically just shareholders. So a token, owning a token that represents a share means that you are a contracting party, you're a shareholder in that agreement. And you think if you think about bonds, again, it's a contract that defines it, defines what that asset is, and everything is pretty much the same, even tickets, even utility tokens. There's a contract to say this is a ticket that will give you a right to a service in the future, but there's definitely an agreement that defines what that is. So record of ownership. And then once again, so the great properties of Bitcoin, I believe, can make these digital record ownerships very, very potent, very exciting, very valuable. So the basic control model of my token protocol, issuers control smart contracts. Smart contracts control the assets or define the assets. Tokens represent the assets, and a user owns the tokens. So a smart contract, I want to define this because we live in an age where that term, the definition is getting a bit wishy-washy, and we have things like Ethereum that define a smart contract to be a purely decentralized thing. I don't believe it needs to be on a blockchain. So I think of a smart contract as simply software that uses, a smart contract is simply a contract that uses software to facilitate, verify, or enforce the negotiation or performance of some or all parts of a contract. That's it. And one of my examples of a smart contract used today in mainstream business that is not on the blockchain is Uber. So think about how Uber uses smart contracts with their drivers and their customers. So tokenized contracts. So we've got smart contracts, which are ones that are dynamic, that have contracting parties that change with time, that rights and duties that may change with time, and there might be performance related triggers or things that happen. And static contracts are more like non-disclosure agreements, service agreements, things that are just done once, and then through that time period, people just abide by it. So really for a static contract, all you want is the immutable record on chain to prove that it happened and who was involved in it. So system design, protocol completely contained within the op-return payload, so prunable. Mechanism, user broadcasts a signaling action, and the smart contract responds with a confirmation or rejection action. Tokens are owned by a public address, not UTXOs, and each smart contract operates on the first team principle and depends on a trusted node. So there's 27 actions that make up our protocol. So just give you a second to breathe that in. So the key ones that we sort of separate us from a lot of people is the governance and enforcement operations. So these are things that allow tokenized protocol to be lawful, to comply with regulations across the world, to allow for a great deal of expressiveness to satisfy use cases. This is what issuers want. I genuinely believe that on the majority. So the action mechanism, this is just a quick idea of how this works. So every signaling action that a user or an issuer broadcasts to the blockchain, the smart contract will respond either with a rejection action, if that doesn't fit with the protocol's boundaries or the contract's rules, or an acceptance or validation response. So we support nearly 50 asset types. So what that means is we've gone through and we've structured the metadata in a way that allows for anyone to use it without defining it for themselves without any certainty, so they just need to fill in the forms in. So right now we've got 3 that are available, or 4 right now, coupon, shares, bonds, and tickets, emission tickets are available now. So on our GitHub, you can go see what we have there, but more coming in February. So if you're interested in learning more about tokens, smart contracts, and like that, please visit our website. We've got the white paper there, we've got the GitHub repository, and we've got more information that we're releasing. And feel free to sign up, and we'll send you information as it comes out. That's it. Thank you.